5 bills you may not have to pay after 65, and most seniors are still paying all 5. One of them is not a program you apply for. It is federal law. If this is useful, gently tap that like button. Here is the number this starts with. By the end of this video, you will know all 5, what each one is worth in real dollars, and exactly where to apply. Start with the biggest. In 2026, the standard Medicare Part B premium is $202.90 every month. That is $2,434 a year, taken straight out of your Social Security check before it ever reaches your bank. Most people assume that deduction is simply the cost of being on Medicare. For millions of older Americans, it is not. There is a set of programs that pay that premium for you, and the money goes back into your monthly check. Before I go further, let me be straight with you about the word exempt, because a lot of videos on this subject stretch it. Only one of the 5 things I am about to show you is a true legal prohibition, where a company is forbidden by federal law from sending you the bill. The other 4 are real programs, written into law, that erase or shrink a bill. But they all have one thing in common. Not a single one of them finds you. You have to apply. That is exactly why so few people ever get them. Here are the 5. Number 1. Your Medicare. Part B Premium. The programs that pay it are called Medicare Savings Programs, and they are run by your state, not by Medicare itself. That detail matters, because it is the reason nobody at Medicare ever calls to tell you about them. There are several versions, and the most generous one is called QMB, which stands for Qualified Medicare Beneficiary. If you qualify for it, your state pays your Part B premium, and that $200 a month stops disappearing from your check. The line most people never check. In 2026, in most states, the QMB monthly income limit is about $1,350 for one person and $1,824 for a couple. There are asset limits too, roughly $9,950 for an individual and $14,910 for a couple, and your house and your car do not count toward that. Now here is the part almost nobody knows. Several states have raised those limits, and some have removed the asset test completely. So the federal number is a floor, not a ceiling. The limits side by side. And if your income is a little above that line, do not walk away. There are 2 smaller programs called SLMB and QI, with higher limits that still pay your entire Part B premium. Many people rule themselves out by glancing at one number and deciding they earn too much. The application is free, the state has to answer you, and the worst thing that can happen is they say no. $2,400 a year is worth a phone call. Number 2 is the real one. This is not a program you apply to and hope for. If you are enrolled in QMB, federal law prohibits Medicare providers from billing you for Medicare cost sharing at all. Not the deductible, not the coinsurance, not the copay. And this is not limited to doctors who take Medicaid. It applies to all original Medicare and Medicare Advantage providers, and it applies even when the state pays the provider nothing. What that actually means. This gets violated constantly, and usually not out of malice. A billing office simply does not see the QMB flag and sends the statement automatically. Medicare calls this improper billing, and providers who keep doing it are violating their Medicare provider agreement and can face sanctions. So if you are in QMB and a bill arrives for a deductible or a copay, that bill should not exist. Call the provider, say the words QMB improper billing, and ask them to check your status and cancel the charge. Quick pause. If you are learning something here, leave a comment with your state, because these programs are run state by state, and other people watching will want to know what is available near them. Now the third bill. Number 3, your prescription drug costs. The program is called Extra Help, sometimes called the Low Income Subsidy. It pays your Part D premium, it pays your deductible, it cuts what you pay at the pharmacy counter, and it wipes out the late enrollment penalty if you were ever hit with one. That penalty is permanent for most people. Extra Help is one of the only things that makes it go away. The limits here are much higher than people expect. Look carefully at those numbers. $2,015 a month for a single person, $2,725 for a couple, and $18,000 in resources, $36,000 for a married couple. That is a great deal more room than most people assume, and it means plenty of middle-income retirees qualify without realizing it. You apply through Social Security, and the application is free. If you are already in a Medicare Savings Program, you are usually enrolled in Extra Help automatically. Number 4. Part of your property tax. This one is not federal, it is state and county, and that is exactly why it is so easy to miss. There is no national announcement, no letter in the mail. Every state runs its own version, and there are 4 basic kinds. An exemption cuts the taxable value of your home. A freeze locks that value in place, so a hot housing market stops raising your bill. A credit or rebate sends money back after you pay. And a deferral postpones the bill, though be careful with that one because it becomes a claim against the house. The 4 kinds. The amounts can be serious. In Texas, school districts must provide a resident's homestead exemption of $140,000, and homeowners 65 and older get an additional $60,000 on top of that. New Jersey reimburses 50% of property taxes up to $6,500 for homeowners 65 and older, and renters are often included too. Missouri runs a circuit breaker credit that pays up to $1,100 to owners and up to $750 to renters. So if you rent, ask about the circuit breaker by name. Number 5. Your phone and internet bill. There is a federal program called Lifeline, run by the Federal Communications Commission, and it takes up to $9.25 a month off your phone, internet, or bundled service. On tribal lands, that rises to $34.25. It is not a discount code, and it is not a promotion from your carrier. It is a federal benefit, and you take it to a participating provider. How you qualify? Here is the part that catches people out. It is one benefit per household, not per person, and you have to recertify every year, or it stops. That yearly recertification is where most people quietly lose it. They do not cancel, they simply never answer the notice. So if you sign up, put the date on your calendar the same day. And one more that is not a bill, but a bill you may not owe at all. Federal income tax. In 2026, the standard deduction is $16,100 for a single filer, plus an extra $2,000 if you are 65 or older and unmarried. On top of that, there is a new senior deduction of $6,000 per person, $12,000 for a married couple where both qualify, available through 2028. It phases out above $75,000 of income, $150,000 for joint filers. Stack those together, and a great many retirees living on Social Security and a modest pension end up owing nothing at all, and some are not required to file. But be careful here, because this cuts both ways. If tax was withheld during the year, or if you qualify for a refundable credit, not filing means you never get that money back. So the honest advice is this: do not assume you must file, and do not assume you must not. Check. There is one situation where all of this matters more than any other, and it is the one people are least prepared for. When a spouse dies, household income usually drops, sometimes by a third or more. And that is exactly the moment when someone who never qualified for these programs suddenly does. But nobody rechecks because they were told no once, years ago, and they remember the no. If you have lost a spouse in the last few years, every limit in this video is worth looking at again with your new income. Several states also let a surviving spouse keep a senior property tax exemption at a younger age than the normal cutoff. So how do you actually do this? It is simpler than it sounds, and it is mostly one phone call. Start with your state health insurance assistance program, usually called SHIP. Every state has one, the counseling is free, and it is not a sales operation. They will screen you for the Medicare Savings Programs and for Extra Help in the same conversation. If you would rather go direct, Extra Help is handled by Social Security, and the Medicare Savings Programs go through your state Medicaid office. For the property tax side, the assessor in your own county is the right number, not the state. Have these ready before you call. 2 mistakes cost people the most. Let us put the whole thing together. So, to sum it up, your Part B premium, worth about $2,400 a year, can be paid by a Medicare Savings Program. Your deductibles and copays cannot legally be billed to you at all if you are in QMB. Extra help covers your drug premium and erases the late penalty. Your state has a property tax program, and renters are often included. And Lifeline takes up to $9.25 a month off your phone or internet. 4 of those 5 require you to apply, and every one of them has a deadline. Nobody announces. So here's your one action step. Call your state Medicaid or aging office and ask a single question. Do I qualify for a Medicare Savings Program? That one call is the doorway, because in most states, qualifying opens extra help automatically as well. It is free, it takes about 10 minutes, and it is worth thousands of dollars a year. This is general information, not tax or legal advice. And the limits change every year, so check your own state. If you want to go deeper on the property tax side, I made a full video on that, and you can watch it right here. Subscribe to the Daily Brief, where we explain your money in plain English every single day.